Good evening, ladies and gentlemen. Welcome to the 25th Outright Financial Matters webinar series, brought to you by Finance Leap, where we financially learn, be inspired, and perform. And today, we are very honored with a hot topic: national budget priorities, implications for business. And to help us navigate this topic is a seasoned CEO of Maranatha Financial Services, Mr. Kisuse Julius. And Julius, in our audience we have entrepreneurs, we have business owners, we have the academia, we have students, we have also individuals who are looking forward to being entrepreneurs, to being business professionals. And all sorts of personalities with different backgrounds. They are looking forward to see what is in it, what is in this year's budget, 2026, 2027, in terms of priorities for business. But we'll start it on a light note. Julius, as a CEO of a company that has several branches, what does your working day look like on a busy day?
Good evening, viewers. Thank you for tuning in to this webinar. Thank you for sparing time to come and we discuss. Promise by the government to send us resources to pay for the services. It is something that's very, very important because it affects our daily lives. The priorities of government are mentioned in the budget. The government sets priorities, makes promises through the budget. The government makes estimates of how it's going to spend on the service that is going to give us the whole year. This year, 2026-2027, the budget passed by the parliament totals to 84.3 trillion. It is themed around things like full economic monetization of the economy, commercial agriculture. It is prioritizing the EACOP. EACOP is the East African Crude Oil Pipeline. because the completion of this infrastructure is going to usher in our first commercial oil production. So the expenditures the government is going to make, the big one is the EACOP, because it is going to stimulate the economy. The budget usually has it's divided into two components of the expenditure. In the appropriation, we see that the government is going to spend 47.1 trillion. And then 37.23 trillion are going to be spent on servicing debts. So that is what the budget is basically all about. We are relying on domestic revenue, 44.1 trillion. That is about 52% of the budget. It's going to be coming from us, from domestic revenue, that is taxes. Then domestic financing is going to contribute 13.9. Domestic borrowing is going to contribute 11.9. External project support is going to contribute 11.27. Then we are anticipating to get 1.4 trillion from petroleum revenue. And then grants, lastly, we shall have local revenue that is coming from local government. So precisely, that is the budget. The full envelope is 84.3 trillions. It is the first of its kind. It's an ambitious budget. We have not been here before. We hope that we can raise that money to finance the services. Yes, Charles.
Thank you so much. When you look at 84.3 trillion,
yes,
it's big money.
Very big money.
And it's big money for our economy.
Yes.
Now, looking at it from the perspective of business,
yes,
how do you see this money in terms of propelling business going forward in 2026, 2027 and beyond? This money being put into the economy, how will it impact business going forward?
Going forward, we can look at things like business operations. Basically, we can see that for businesses which are not going to what can I say? The businesses that the business should embrace it, first of all. They should embrace it. But businesses that are not going to be flexible, they are likely to face reduced profit margins because we are seeing increases in excise duty.
Okay.
This, on a large scale, affects the prices of goods and services.
Okay.
And at the end of the day, it impacts the cost of doing business.
Okay.
So if you can see that if you cannot pass on these costs to the customer, then your profit margins will go down. Then we are going to see that these higher tax obligations, if they are not adjusted to retail prices, if you're not going to adjust your prices, or if you adjust your prices above what your competitors are charging, that means your business is going to lose that market share. So you need to be very careful because, as I've told you, that 52% of this money is coming from domestic revenue. So that means increase in taxation. That means businesses are going to be more taxed. The cash flows are going to be affected. The businesses' cash flows are going to be affected. We are seeing amendments being brought in parliament, tax amendments, like the payee. Those are going to affect the businesses. That means businesses are going to adjust their payrolls. They are going to withhold taxes. That means your operating capital is going to be affected. Then we see restructuring. Businesses need to do restructuring. How are they going to be restructuring? Some businesses should shift focus on those tax-exempt goods.
Okay.
Because most of the goods that are going to be taxed are those goods that mainly influence consumer behavior. But we can also talk about compliance issues. When you see things like IFRIS, new regulations Yeah, Uganda Revenue Authority, this budget is targeting digital compliance. If you're not going to be compliant on things like IFRIS, that means you're going to be affected. There's going to be staff training. Your staff need to be trained into the new tax regimes. They need to understand how taxes are going to affect them. There will be risks of penalties for those that are not going to be compliant. That means businesses, in order to avoid those penalties, they need to employ consultants to help them on how they are going to navigate those tax amendments, the reviews that are going to be brought. We can also look at, on a good side, financing and credit. The government is targeting to refinance institutions like Uganda Development Bank. They are going to put more money into PDMs. That will be stimulating consumption. And that means businesses are going to be, people are going to spend more. So if we target those areas that we are going to be, where money is going to be put, that means your business will be what? Will benefit. The digitalization and automation is also going to help businesses that are compliant in invoicing, accounting system. You need to invest in software that is going to help you track expenses. Otherwise, if you don't do that, the taxman will come in and tax you, even for expenses which would have been not included in the tax. Yes, that's what I can say. Yes.
Thank you so much. When I look at the budget for 2026-2027, I see PDM alone is 2.5 trillion into the economy at parish level.
Yes.
How do you see that affecting day-to-day business operations in the parishes?
In the parishes.
Where most of us come from, in our communities.
Yes.
In terms of boosting business.
The PDM.
Yeah, PDM itself.
The government has, at the grassroots, they are targeting wealth creation. Most of the money has been put into human capital development. The government is targeting PDM. How is PDM going to stimulate consumption and development? The 2.5 that is being sent at the parish level, we can see that it is going to stimulate production. The government is targeting to stimulate production. You can see that it is the president is preaching things like moving from subsistence agriculture to commercialized agriculture. They want to put more money into the households. Most of the time, households have been, poverty is being, people have been growing food to eat, growing to eat. But what we are seeing now is that the government wants to stimulate production. It wants people to move from subsistence agriculture and then into the money economy. We want to move into the money economy. People growing something, but also reserving something to what?
For sale.
For sale. And that way, the businesses are going to benefit in a way that people, the purchasing power of people will be what?
Will be high.
Will be high.
Yes.
Yes.
Now, looking at the national budget priorities and painting a picture of the entrepreneurs, the business people, do they participate in setting these national priorities? Or they just find those priorities there and they have to fit in themselves? Do they participate, and to what extent do they participate in setting national budget priorities, particularly those that affect businesses?
Okay. What I can say is that the budget, the fiscal year runs from 1st July to 31st. To 30th June.
Yes.
And the budget moves through 4 stages. That is formulation, parliamentary approval, execution, and oversight. That is the cycle of the budget every year. And whenever the budget is going to be made, the Minister of Finance, working with the Uganda Revenue Authority, and then the Bank of Uganda, they make estimates. Every year they make estimates. And these people, they look at the taxes, the non-tax revenues, and the borrowing or grants. So through sector working groups in the ministries, local governments, they draft their budget framework. That is step number one. They draft budget frameworks in line with the national priorities. That is the National Development Plan. Remember, we are in the second year of the National Development Plan too. So after that level, the government holds public consultations. We call them national budget consultations or conferences. They gather inputs from civil service, civil society, from the local government, and then they also engage the citizens. Then the budget, that process begins from September to December. By 31st December, the budget is supposed to be presented to Parliament. And when the budget is presented to the Parliament, that national budget framework is presented to the Parliament by 31st December. That is what the law says. Then when the budget is presented to the Parliament, it is sent to the committees, the budgetary committees, for review. The parliamentary committees and the Parliamentary Budget Office review the sector allocations in consultation with all stakeholders. Stakeholders from different sectors are called. They are called. Then the final approval, according to the Act, the Public Finance Management Act, the Parliament must review and debate this budget by May 31st. Then what happens is that after that level, the budget execution starts on July 1st. Then local governments and lower governments receive their budgets in the form of conditional and the equalization grants. How are these private sectors engaged? Business leaders consistently present their positions at the formulation stage. They are invited to present their positions. Secondly, private sector feedbacks, they advocate for direct relief. These people bring in their what? Their views. They are engaged at that formulation stage. Then, at the end of the day, their views are incorporated into the budget. But they are incorporated at different levels. When the ministry is engaging in the national budget conferences, but also in the parliamentary reviews, sector leaders are called. The PSFU, the civil society, budget advocacy groups, they are all called in to put in their what? Their views before the budget is what? Is passed.
What I hear very loudly and very clearly is that the business people, the entrepreneurs, all stakeholders are consulted and are engaged in setting national budget priorities. So the question is your business perspective looked at in terms of those priorities so that you are able to align yourself with the national priorities?
Exactly.
Thank you so much. For those who have just joined in, we are handling national budget priorities for 2026-2027 with implications on business. And to help us navigate through this topic is Kisuse Julius, who is the CEO
Maranatha Financial Services. Yes.
I think it's a term that I must get familiar to. Yes. Maranatha Financial Services.
Yes.
And for those who have joined us, please pay attention. We are getting deeper and deeper into the gist of the budget. Mr. Kisuse.
Yes, please.
We have taken us through the process of setting the budget priorities. Once that process is done, the priorities have been set. How do we get to know and appreciate that this is the final that we are going to receive, and that as stakeholders like me here in Finance Leap, to know that in my area of financial education, these are the things that affect me, These are the things that affect financial management services. These are the things that affect agriculture. These are the things that affect mining. These are the things that affect roads. How do we get to know? For the common man who is down there in Mitoma, who is in Karamoja, how do they get to know these this feedback?
The figure. So what happened is that on June 14th, the Minister of Finance comes to Parliament, of course on behalf of the President, and presents the budget. But what we need to know is that the budget has shifted from being a sector focused budget to a program-based budget. The government has highlighted around 7 priorities, areas where it's going to invest. But these priorities are not sector-based, but they are program-based.
Okay.
The big one, the one that is receiving a lot of money, is the human capital development.
Okay.
The human capital development is getting 13.5 trillion. And what is human capital development? Funds, these funds, the human capital development is targeting things like health, education. That's what I'm trying to mean, is that it's no longer a sector budget planning, but it's a program-based planning. The government is saying that it is the healthy population that can influence production. If someone is healthy, that's when they can work. So you need to invest in human capital development. So this is taking the biggest shares. And amongst this, it includes funds that are going to be phased for salary increments for teachers, for healthy workers, construction of hospitals, construction of schools. That is where money is going to be almost the biggest share of the budget is going to be in human capital development. The second one is going to be in infrastructure development. This is targeting roads. 10.8 trillion is going to the infrastructure development, roads. The big one here, the biggest infrastructure that is going to the around 2 or 3, the big one is the EACOP, the East African Crude Oil Pipeline project that is going to stimulate the first commercial production of oil, and we are targeting to get at least 1.8 trillion from the oil production. Okay. Then the second one is the SGR, that is the standard gauge railway, especially on the eastern part of the route, Maraba and where we want to ease transport. For goods that are passing through Mombasa. That is one of the biggest infrastructure development that are going to, of course, even the Ginger Express Highway that is going to ease on traffic and along that route. Then another one is peace and security. You know, this is very, very important to maintain stability, national stability. It is taking 10.2. Welfare creation programs, you've already talked about the PDM, which is getting 2.5. This is going to support localized economic programs, the PDM, the MIOGA, youth initiatives to help carbon youth unemployment. We are looking at the digital transformation, ICT. Most of the civil society organizations like CBAG and the East African CEO something, that associations, they want government to put a lot of money in e-government. The citizens should be able to get services online. And the government is investing in our national infrastructure. Then we are looking at manufacturing and industry. Almost 1.04 trillion focusing on boosting domestic production and processing. Then the big one is AFCON 2027. Uganda is going to host AFCON in 2027. Of course, in collaboration with other East African countries, Tanzania and Kenya. So the government has reserved 496 billions for us to it's devoted to construction of the infrastructure that is going to help us in getting ready for that upcoming event. So I can say that the economic targets are that poverty the poverty level should be reduced. Then the gross domestic product, I mean the country should be developing, at least they're targeting a 2-digit development. So we want to move from 6 to at least 10 and above. So that's how we are going to monitor and see whether the people will be affected by this budget. Yes.
I see the budget almost having something for everyone.
Yes.
I see the workers, I see the health sector, I see the roads that support everyone, I see the ECOP, we need this oil out of the ground. I see the standard gauge railway in the perspective.
Yes.
When you put all this together, and position, say, yourself,
Yes.
The people behind the cameras,
Yes.
how do they position themselves to partake carefully of this national cake? And by the end of 2027 June, when the financial year is ending, we see money
in our pockets.
In our pockets, like the president has said, Kisanja no sleep, money in people's pockets.
Yes.
How do we capitalize on this
Yes.
resource that has been really talked about, well explained? It is big money, but it may be big money and end in other people's pockets.
Yes.
How does it end in our own pockets? Where it is for value of what we have offered to receive it.
It is, what I can say is it's a win-win. You can say it is, when you look at this budget, almost 52% of the budget is going to be financed by taxes, revenue, fiscal policy. The government is revising its fiscal policy. What is happening is that Uganda Revenue Authority has made certain proposals. If we are to achieve the targets of this budget, but some of these proposals, you can see they can affect. They have pros and cons, both on the individuals and on the businesses. For example, the income tax amendment. They have made a revision on the payee. For example, if you have people like the ones that you've mentioned behind the camera, and you've been paying them less than 235,000, that is the revised income tax amendment is that payee is going to, the threshold is going to increase from 235 to 335. That means all those people below that threshold, if you've been earning money 335,000, you're going to be tax free. That money is going to be tax free. So it's a relief for lower income and middle. So you will have some additional money. I've calculated this money myself. Someone who has been getting 500,000 and below, they're going to because of this revision, their salaries will increase at least by 10,000 every month. Because of that. So that revision alone, the payee revision, is going to somehow, for those that are earning less money, the low income earners, they are going to retain something. Unfortunately, for those that are going to those are earning more than 10 millions, their taxes are going to be, their salaries are going to be taxed 40%. So for those ones, they will cry, I think. But then for those that are lower income, their take home is going to increase.
Wonderful.
Then we can see the middle income earners, their take home is also going to increase. But then those that are above the retained caps, the 10 millions and above, they will not get anything. What is the impact on the business? That means increased payroll administration, because they have to change their payrolls. They will have, we have seen that people that are engaged in organizing events, event organizers, previously they have not been taking anything reserving anything for the country. But then the revenue has been revised to 6%. For every event that you organize as an event organizer, 6% of it will be taxed. Then there are those cross-border finance, those who get income, capital from outside Uganda. They are also going to be taxed 10%. So for those ones, we can say they are losers. The operational costs for doing business are going to what? To increase. But then, when you see the income tax amendment bill, the income tax amendment bill, the revenue is trying to target tax gains on non-business assets. For example, if you let me take an example. If you invest, if you're invested in, your business is capital intensive. They are not going to be carrying losses. We have been reporting when you make a loss, for example, in your business, you don't pay tax. But then for long-term tax losses, those are going to be charged 0.5%. That means for businesses that in capital-intensive business, they are likely to be affected. But then when you look at value-added tax amendments, VAT previously for companies whose turnover has been 150 million and below, all of you have been, all those businesses have been, they are supposed to register for VAT. But this has been increased to 250. So that means those businesses are also going, they are going to have some relief in taxes. But then there are new taxes on stamp duty. On stamp duty. If you've been buying land, people have been investing in land. When you buy that land and sell it, you're going to get, stamp duty has been revised from, I think from 1.5% to 3%. So that means for every land that you're going to buy and sell, 3% of it will be taxed. So this is targeting, taxing the wealthy. Those that are earning, especially those in real estates, the transfer prices are going to increase. Those dealing in motor vehicle transfers, the transfer taxes are going to increase. The cost of doing business is going to increase. But precisely for low-income earners, they might benefit. They might have reserved something because revenue is targeting especially those people that have been outside the tax net. Yes.
Thank you so much. That gives us a good perspective. We are almost half an hour into the program. And for those who have just joined in, we are talking national budget priorities. And our socials are open. Please forward your comment or question. We'll be able to come to that towards the end of the program. Julius.
Yes.
Every year, they make budget proposals, which look very nice. What makes it different this year in terms of monitoring and follow-up to ensure that these proposals are going to be implemented as proposed, so that the benefits are to all of us, the costs are to all of us, so long as we are in those categories. What is different in terms of what they have put in this budget for monitoring and for evaluating to ensure that they are followed as expected?
As expected.
Because Uganda is known for making very good plans.
Exactly.
But implementation, we have issues. What's your take?
I can look at the execution part. In fact, the vision, a good vision without execution is daydreaming. That is what Bill Gates says. If you have a good vision, but you don't execute it, that is daydreaming. So the budget looks so good. But then the implementation, what makes it different from others is that, first of all, we have a new government, a new parliament, a new way of doing things. Chisanja, no sleep.
No sleep.
There's no sleep. We expect good things from them. One of the biggest responsibilities of the parliament and the office of the prime minister is monitor the implementation of this budget. There need to be strict statutory compliance, especially in the release of funds, meeting timelines. What the civil society has been crying for so much about is that money usually delays. By the time people ask for that money, it is not yet ready. And it's usually given to people very late. So there's going to be strict statutory compliance. All these things are already stipulated in the Public Act, in the Public Management Financial Act. The timelines when money is supposed to be delivered. It is delivered in phases. But again, we can look at the monitoring part, revenue and deficit targets. First of all, URA has been given a very big task, an enormous task of collecting 44 trillions. That is not very easy. Of course, basing on the previous targets, it is not such an easy target. But what revenue needs to do, we are going to look at these targets on a quarterly basis. That's what is going to happen. If the targets are not being met on a quarterly basis, that means we may not be able to achieve the budgets. So revenue targets, the revenue shares, the government is earmarking paying debt servicing. 33.7 trillion is going to be used for paying debts. So if these targets are not being made, we need to look at the debt, external debt to export ratio. Is it dripping down? So this needs to be monitored on a what? On a quarterly basis. Economic growth targets. Is the economy tracking the targets? The growth targets as it has proposed? If they propose to move this economic growth target to 2 digits, the 2 digits. If we reach, for example, a quarter of the year and we have not made the targets, that means we are not going to achieve these targets. So there need to be a deliberate, conscious effort by every responsible person. The parliament, the Minister of Finance, they need to keep on tracking the job creation. Are the ministries meeting the national budget targets? If, for example, we have said we are going to make 200,000 jobs, we are going to create 200,000 jobs, and around half the year, you have not met those targets. What is going to happen? The poverty reduction and inclusion plans, the subsistence economic shifts. Are we seeing reduction in the number of people, number of households surviving outside the cash economy? We have put PDM as one of our flagship programs. What happens if this money is invested in people, but we are seeing more people becoming poor? So at the end of the day, there needs to be a deliberate effort, at least on each and every kind of level, where people are going to be evaluating, continuous monitoring and evaluation of all these programs. The way money is being disbursed is very, very important. Is it meeting the timelines? If these are not made, then we will stop at daydreaming. It has been a very good program, a very good budget, but if it's not being implemented as they had proposed, then we may not achieve the targets that we set to achieve.
So I can see it clearly that it starts with us by paying the taxes.
Exactly.
52% of the money
it's coming
from the taxes.
Yes.
So if you are not paying the taxes, it means that money will not come. And if it does not come, it means we are not going to get the services we expect from government. But 2 is that the things that have been put in plan must be monitored to ensure that they are tracked to detail with key performance indicators on a quarterly basis to be able to realize this budget. We have a question from the audience.
Yes.
And the question says, if I've been paying a per diem at 100,000 for somebody to go to the field and work, or a daily allowance of 100,000.
Yes.
If I divide it by 2 and pay 50, what is the implication on tax?
Is the per diem for the whole 30 days or for just an event?
Various, multiple days within the
Multiple
month.
days. If you divide it, that will be tax evasion. But then what we are trying to say is that if per diem is an allowance, what revenue is saying that almost all, in fact, the movement from the analog to the digital way of doing things is for curbing tax evasion. Many people have been evading paying taxes, but then per diem is supposed to be added onto your on your what? On your salary, and it is supposed to be taxed. So if you reduce it by half and pay 50-50, then you're trying to evade paying taxes. That is not allowed. But what we can say is that if all your allowances are added plus your gross salary, and it's not above the threshold that is being proposed by July 31st. That means that if it's not above 335,000, then you are free not to pay the tax. But any money that is beyond that, it is going to be taxed. That's what I can say. But I think that is one way of evading taxes. That is what companies are doing. Paying people some part of money goes through the formal channels and the informal channels. That's how people get extra money. But revenue is trying to get on top of that. And what I can see is that the movement from the digital movement is trying to bridge those gaps and to prevent all those leakages so that the country can get money and to give services to the people. Yes.
Thank you so much.
Yes.
Before we came to this show, I had a number of youth
Yes.
who asked me to pose this question.
Yes.
And it is two-sided. One is around the digital space.
Yes.
The TikTok, the email, the online businesses for people starting.
Yes.
What relief is available in this budget for such young people to be able to enter business, struggle in the first months and maybe years, with some relief so that they are able to operate. That's one. The second is around job creation.
Yes.
That they have finished with many papers.
Yes.
Every year in the budget they are promised more jobs will be created, but every year the people who graduate are more than the jobs that are created in the year, and the number has been accumulating. They are posing a question. What is it in this budget that is different, that they expect to see in terms of seeing more people getting employed?
Digital transformation. Investing in the national ICT backbone. Science and technology. This budget is targeting to support innovation, to support the digital economy, to support the use of technology. One of the big ones has been the costs of internet. They are too high. What the government is trying to do is that to help the national infrastructure. The national infrastructure, it's going to be, they are trying to invest more in it because we know that that is where the country is going, in digital economy. What I can promise the youth is that this budget may not ideally, physically give you a job. But what we can see is that they are going to create enablers, good working environments for companies to start, for the youth to use the available resources to create for themselves jobs. Because the jobs, even if the government could be more efficient, they may not create all the jobs that we need. But I think the budget should target, and that is where the gap is, and that is where my worry is. There should be so much investment in vocational education, creating vocational skills, investing in the youth. But when we see programs like Emioga, where the youth are being catered for, where what is the creation, that is where the government is going to channel money in. If they can position themselves in making those groups, they can, what I can say, kulembeka. They can position themselves where money is going to be put. 2.5 trillion is going to be diverted via wealth creation programs. So those wealth creation, that is where the youth can target. If they can make groups, if they can make, that is where money is going to flow. Physical money is going to flow that direction. So what I can say is the youth, they can go that direction. Because that's where the government is trying to put money. They are not going to create jobs directly, but they are putting money in human capital development. And then they are also investing in wealth creation. Poverty reduction, subsistence economy. We need to see the youth getting involved in production, in productivity. And that is where money is going to be put.
So, if I hear you loudly and clearly, you are saying there is big monies going to the parishes,
yes,
going to Mioga.
Yes.
The youth should actively participate,
yes,
in those activities to tap into that money for investment in the areas that can create jobs for themselves, not to look for the jobs from the government or from the other sectors that are already in place.
Exactly.
Wonderful. There is a question from the audience.
Yes.
This is also about tax. I think tax is a sensitive matter.
Yes.
That what is the difference between income tax and corporate tax?
Okay.
In view of business.
Of business. The income tax is usually charged on the incomes that we make, and the business makes. For example, at the end of the year, the business calculates and summarizes its business expenses and what? And the incomes. So that income that is retained, after all expenses have been calculated, is what we call income tax. It is supposed to be taxed. After, when you file your returns in the Uganda Revenue Authority, they will charge against that income that you've made. Unfortunately, if you don't, the good thing is that it is charged on what you've made. If you have not made anything, you don't pay that tax. That is, at least that is what is happening. That when you make income at the end of at the end of the period, they tax it. If it's personal income, it is taxed as you earn every month. If it is the corporation, if it's a business that makes the income, it is taxed at the end of the what? At the end of the period. At the end of a period. Every earning period, every earning period has a beginning and the end. So at the end of that period, you have to pay that tax. If it's an individual, it's income tax. You get if you make a business, if you have a business and you are earning something, the country expects you to give it something. And if it's a corporation, if it's a corporate, at the end of its business cycle, it has to pay something. Yes.
So income is basically focused on every income you earn, and there is a component that relates to tax that you have to pay.
Exactly.
That becomes income tax.
Yes.
Okay. Looking ahead,
yes,
we have seen a very ambitious budget for 2026, 2027. What do you see ahead for 2027, 2028 in view of national priorities? Are we seeing the budget going down, or we are seeing it in 100? What's your perspective?
What I can say is that we are not going behind. We are not going back. Whatever happens, because there is a national growth plan, the national development plan. It is targeting the economy to grow. Vision 2040 is targeting the economy to grow at least to 500 billion by the end of by 2040. That means since we are moving into even the middle income status, we don't expect this budget to go down. In fact, it might increase another more like 20 or 30%. Yes. So we are likely to see another budget that goes to 100 millions, 100 trillions.
Which sectors do you think that will go into, so that for those who are strategizing,
Yes.
are able to position themselves into that direction? Which sectors do you think is going to attract more investment, looking ahead, looking at the development plan,
Yes.
looking at the statements of His Excellency the President,
Yes.
Sanja no sleep,
Yes.
at the beginning of the term?
Yes.
Where do you think the bigger focus will be? Is it the same areas where we have been, or some other new areas where money is going to be focused?
The focus, those businesses that are going to get involved in tourism, they are the big winners. Tourism, the tourism sector, that is the big winner. We are looking at commercial agriculture and manufacturing. We are looking at infrastructure and energy. Those businesses that are going to, those that can target the oil production, at least for the next 10 years, there is going to be a lot of capital investment in that area. We are looking at, in fact, they are called the ATMs. The ATMs, that is agriculture and tourism, then the minerals, or oil and gas. That is where we are going. So those are the big ones. Those that are going to be involved in because tourism, for example, is getting a lot of incentives. A lot of tax-free things are going in that direction. The government is those that are going to be involved in importation, they should not risk. For example, there are so many amendments, so many taxes are going against, for example, the importation of old vehicles. Old vehicles. Then you should avoid the importation of second-hand clothes. Those are they are incurring a lot of taxes. Then gaming, because most of the excise duties or taxes, they are targeting behavioral change. If the government is, for example, is trying to achieve its agenda on the environmental side, so anything that is contrary to the environment, because that we are going greening, the greening investment, so that you should avoid. Gaming, you should avoid, because it's going to be more taxed. Unfortunately, that is where most of the youth are going. They're getting involved in gaming activities. But tourism is a bonus, and then you go to commercial agriculture, you go to oil and gas, manufacturing. That is where the way to go.
Wonderful.
Yes.
That's a new term. Me, I thought ATM was going to the ATM machine,
No.
but it's not that one. It's the ATM of agriculture,
tourism, and manufacturing,
oil and gas.
Oil and gas. Yes.
Wonderful. As we come close towards the end of this program, looking into your area, which is financial services,
yes,
where a big number of our audience is in financial services. What do we see? How do we strategize better to make sure that we capitalize on 2026, 2027, given your understanding of these national priorities for 2026, 2027, so that there is a big leap in this sector? Because these sectors are growing, banks are growing, some are merging, some are leaving the country, microfinance institutions are growing, circles are coming up, some of them are bigger and becoming bigger than banks. What do we see? What are the opportunities there?
I think we should all understand that for businesses to survive, they need credit, they need cash. Businesses need funds. And almost all the financial institutions that we have in the country are fallen. Most of them are fallen. Almost 90% are fallen owned. So that is why the government is bringing in programs like Emyoga. It is refinancing the Uganda Development Bank. the asset, the ACF, that is the agricultural credit facilitation that is passing through the Bank of Uganda to the commercial banks. These programs, the PDM, Myoga, and everything, we have realized that there is a gap. You have said that the youth, after getting to school, they have the ideas, they have made the proposals, they have the business proposals, but what they are lacking is cash. Unfortunately, at the moment, the cost of borrowing is too high. The interest rates are too high. And then that's the reason as to why these financial, the microfinance and the SACCOs, they are bridging that gap. So any organization or any group of people that will organize themselves and then make maybe a SACCO or a credit organization, they stand to benefit because the government has realized that they need to finance these groups. They need to give people money if they are to start some productive investment. So at the end of the day, any person or any individual should always find themselves at least aligned or engaged in some saving and credit organization because that is how we are going to get cheap capital, cheap money, in order for us to invest in a business that will, in a business idea that we have. So at the end of the day, businesses need capital, but the cost of borrowing is too high. The microfinance institutions are getting money from commercial banks. That is why they're also putting a margin on it. But then if you can easily get into your own circle, you save, and you save and invest or give it to someone who has a business idea. That is cheap investment. The government will come in to put in money on using PDM and the Myoga, but that money is not enough for someone who wants to do something. So this money needs to be even increased because giving a full parish 100 millions, it's not enough. How much is each person going to get? That means either they wait for someone to use it and then return it, or they can mobilize their own savings and then finance their business ideas.
Wonderful. I see the power of SACCOs expanding in 2026, 2027. I see the need to put ourselves in groups for investment purposes as a very powerful tool for enabling us to get affordable capital. There's no cheap capital, but affordable capital.
Yes.
I see the perspective of financial institutions also attracting money from SACCOs that are now in big volumes,
exactly,
which helps them to boost their capital and therefore their stability. So I see the picture in the financial sector getting better. We are almost towards the end of our program.
Yes.
What would be your quick wins in a view of 2026, 2027, so that the people can go with these takeaways from this engagement we have had today in 1 minute?
In 1 minute. I would say that for individuals, you may stand to benefit, but for businesses, we need to revise the way we are doing things. We need to get we need to engage, to re-engage ourselves, because this budget is coming, and the biggest share, as I've said, is going to be domestic revenue. And domestic revenue is taxes. So we need to keep our proper books of accounts. We need to engage consultants. How are we going to manage, to navigate, so that we can avoid the penalties? The penalties are likely to be there, and they are likely to be high. You have already seen what is happening in the city. People are being removed from the what? From the veranda, from the streets, because they want them to get involved in the money economy. When they get into the money economy, they are going to be entering into the tax net. So when they enter into the tax net, they will be taxed. So we need to, first of all, revise our consumption levels. Get to know how much you earn and how much you're going to spend. Because at the end of the day, we need to tighten our belts. Because the budget, the way I've seen it and the way it's going to come, it is going to target each and every person. You need to re-engage your vision. You need to re-enact your vision. Sit, look at the way your business is operating, revise the business processes, revise your business processes, and get to know how you're going to navigate and avoid being penalized, because the taxes are going to come.
Thank you so much, Kisuse Julius,
yes, sir,
for the moments you have shared with us that have been empowering and powerful. And in case you forget everything else, remember ATMs.
Yes.
Thank you so much, and thank you for being a nice audience, and have a nice evening. Thank you so much.
Thank you so much too.